please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, the top story today, as ICICI Bank battles allegations of a nexus between CEO Chanda Kochhar's family and Venugopal Dhoot of the Videocon group, we learned from sources that the CBI has accessed the documents of Videocon's investment in Deepak Kochhar's firm. Utkarsh Chaturvedi now joins us with all the details on that. Utkarsh, over to you.
Well, these are two separate transactions which CBI is looking at. One is obviously the loan which was given to Videocon, and then the transaction between Deepak Kochhar's firm and Videocon. What our sources indicate is that CBI has already questioned officials of ICICI who were instrumental in processing the loan. Also, what we pick up is that CBI has all the documents relating to the transaction between Deepak Kochhar and Videocon. Now, what our sources tell us is that CBI is likely to ask Deepak Kochhar and Chanda Kochhar to join the probe. Remember, they cannot summon any of them given the fact that there is no FIR which has been lodged yet. CBI needs to lodge an FIR to really summon anyone or to conduct any raids or searches. So this is what we are picking up at this point of time. What CBI is really looking at is that in the PE, if they find some evidence of wrongdoing, they will go ahead and file an FIR. Post that, searches, raids and summons might follow.
All right, Utkarsh, thanks a lot for that. In fact, we also spoke with ICICI Bank's founding chairman Narayanan Vagul on this issue. He defended Chanda Kochhar and the bank, saying that the debt of 3250 crore rupees is not a new loan to Videocon but a consolidation of the exposure over time. Listen into that big exclusive.
I know these two people very well. Mr. Sharma personally is a person with unimpeachable integrity, and I think more than unimpeachable integrity, is very thorough in whatever he does. And when he does it, I think when he makes a statement that there is no conflict of interest, there is no quid pro quo, it was done in the normal course, I have no reason to doubt his statement. And as far as Chanda Kochhar is concerned, I know her for 35 years, but 25 years I worked closely with her. I can't even imagine that she could ever be a party to a transaction which could have a shadow of doubt or anything like that. So, I don't know the full details. I did find that the clarifications could be a little more done in greater detail. That's why I said when the clarification came, I wanted to find out what exactly is happening, because in 2016, I did not pay much attention to it. It was, I did not know who was making that allegation. It came in a series of WhatsApp messages to me. And when the bank said there is no truth in it, I believed in it. 2018 was made by an individual through a letter that was written. So I think it had to be taken seriously, and 2018, the whole thing went into a public domain. What was a loose rumor? You don't put it in the public domain.
No, Mr. Vagul,
no, I appreciate that, yeah. Mr. Vagul, but if I can specifically, sorry, Lata, just one second. If I can specifically ask you, sir, since you said that you decided to take the allegations much more seriously in 2018, and you have asked the bank questions specifically with respect to the allegations made, what is the clarity that you have got on this convertible debenture of 64 crores, sir? Because that is really at the heart of the controversy, isn't it?
No, I would divide this whole issue into two parts. One part which pertains to the ICICI Bank, another part to the Chanda Kochhar's proprietary issues. Insofar as the ICICI Bank is concerned, I think Mr. Sharma has made a statement that the 3,250 crore loan was not a loan which was given in 2012, but it represents what is known as a consolidation of the loan which was in existence at that time. So this was an issue on which I made inquiries in the bank. What exactly is the 3,250 crores loan? And I was told that 3,250 crores of rupees represents the exposure of the ICICI Bank at that particular point of time. And what happened was at that time, 2012, there was an attempt by, there was a decision by the lead bank, which was State Bank of India, to consolidate all the loans which are given to Videocon Industries and few other subsidiaries, about 10 subsidiaries, more than 10 subsidiaries, into a single loan in order to capture the cash flows and in order to capture the full security. And ICICI Bank participated in that consortium of the 20 banks. The participation was no more than the exposure which they already have of loans which have been given right from the beginning. And as far as I know that this Videocon had been dealing with ICICI Bank from the time of 1985. Their relationship with ICICI Bank was as long as about now 33 years. At the time when I left, it was about 25 years. So, frankly, the 3,250 crores of rupees is not a new loan that has been given to the Videocon, but 3,250 crores of rupees represents a consolidation of the existing loans given to the Videocon and the subsidiary, has not come out.
Okay, and we also wrote to ICICI Bank seeking their comments in light of the rumors linking transactions conducted by Avista Advisory, founded and headed by Chanda Kochhar's relative Rajiv Kochhar to ICICI Bank. And here is their response, and I quote, "We would like to categorically state that ICICI Bank has never engaged with Avista Advisory Group for any services at all. We would strongly urge you not to link the bank and its MD and CEO with this organization at all." End quote.
Welcome back. This is Power Breakfast on CNBC TV18. Now, the big headline from the banking space yesterday came by in a major relief for banks. The RBI has allowed the banks to spread their bond losses over the next few quarters, 4 quarters that is, or 1 year. Lata Venkatesh now joins us with more on the significance of this move. Lata, this decision, how big is it in terms of an aid for the banks?
Well, it was a big request going from especially the public sector banks, especially at the end of the third quarter. Because remember, at the end of the third quarter, on December 28, the government announced a huge borrowing program, an additional 50,000 crore, which led to a crash in bond prices, and everybody was, deep with gashes. Especially if you remember, State Bank of India reported 3,400 crores of mark-to-market losses on its bond book in the third quarter, and that's why they were asking at the end of the third quarter that they be allowed to provide for it over 4 quarters, because it was too much to take in 1 quarter. After a lot of resistance, the Reserve Bank has given in yesterday and said that you may provide for both the third quarter and fourth quarter losses over 4 quarters, but it's coming with some conditions that all banks have to create an investment fluctuation reserve. That is for all the cycles in the bond markets. You provide this reserve so that at a time when your bonds are doing well. So how do you create it? You create it by the profits you make by the selling of your investments. So, therefore, in good times, you put that money in, and it can be drawn down when you have big bond losses. So the IFR should be 2%, the investment fluctuation reserve should be 2% of your tradable portfolio, which is available for sale and held for trading. What is held for maturity is your investment. The 2% of this should be the limit to which your IFR should be done, and you build it over the years from the profit you make from sale of investments. Now, the net of all this is that public sector banks are advantaged now because they had huge losses in the third quarter, as well will have a bit of losses in the fourth quarter. In a very unfortunate way, it kind of punishes the good boys. The ICICIs and the Axis in particular, because, these reserves count as Tier 2 capital. They are below. They will be counted after the net profit. It won't affect your net profit. But it goes into Tier 2. Until now, reserves were counted in Tier 1. Okay. Now, for a bank like Axis, which, unlike SBI, ICICI doesn't have an ICICI Pru or a mutual fund to sell and make Tier 1 capital, this used to count, reserves used to count as Tier 1 capital. Now, for them, it counts as Tier 2. So, a small disadvantage for a bank like Axis. But broadly today, it's going to be positive bonds. Expect a huge bond rally, probably by about ₹1 or so. And therefore, the yield should touch maybe 7.25 or thereabouts. As well, a rally, therefore, in public sector banks.
Okay, so positive news for bonds as well as public sector banks. Thank you, Lata, for joining us and giving us that perspective. But the big story from the insolvency corner coming in, Lakshmi Mittal-led ArcelorMittal and Nippon Steel have submitted their bids jointly for Essar Steel. But here's the two big surprises now. First, Sajjan Jindal-led JSW Steel have joined hands with the consortium led by NuMetal to bid for Essar Steel. That's not all. Even Anil Agarwal-led Vedanta has thrown their hat in the ring. Ritu Singh now joins us with more details on that. Ritu, so it's become a three-way race for Essar Steel after all.
It's a three-way race for Essar Steel, and this time around there have been two surprise entrants in the three bids that have been placed. The first bid has come in from ArcelorMittal. This time they have tied around with Nippon Steel to acquire Essar Steel. The second bid has come in from the NuMetal consortium, but Revant Roya, who held a 25% stake, has been dropped from the consortium. Instead, they've tied up with JSW as an investor to be part of this consortium to make their bid stronger for Essar Steel. Remember, last time, because of Revant Roya's existence in the consortium, NuMetal was declared ineligible on account of Revant Roya being the promoter of Essar Steel, that is Ravi Roya's son. The third and the most surprise entrant in this race is Vedanta Group. Remember, they have already won Electrosteel Steels, and this is the second company in the first list of defaulters where Vedanta is placing its bet. So now it's the three of them, vying for Essar Steel's 10 million ton assets. But do remember, the Orissa slurry pipeline, which is crucial to running the Essar Steel plant, is something that NuMetal has been eyeing and is almost close to acquiring with its agreement with Shrey Infra. That will play a very crucial role. Also important to note that none of the bids will be open before the 4th of April because of the NCLT order, in which the hearing for the eligibility of both Arcelor and NuMetal in the first round is still underway. Until that is done, the resolution professional as well as the committee of creditors cannot open any of the new bids.
All right, Ritu, thanks a lot for that. In fact, we also spoke with the chairman of Vedanta, Anil Agarwal, and here's what he had to say about the company's bid for Essar Steel.
India has a great opportunity, growing market. Steel is going to be one of the highest demand in India. And we have a tremendous opportunity in the iron ore sector also. So it was a great opportunity for me to look at our balance sheet was very strong, as you know. We carry about $8 billion in the balance sheet. We have a debt-equity ratio of 1. So we find this opportunity is right. JSW is fully eligible. ArcelorMittal is also fully eligible. It's not right for me to share the detail of the bid and let it come into the in the transparent manner. But we have done our best to make sure that we make a good bid. Essar Steel is one of the finest plant, I can tell you that. It's the best located plant, and it has made by the Ruya brothers from the heart and soul. So I have this is a great opportunity. It's at the same time, it's very unfortunate that this thing has happened. That they have gone through this process, but I'm very pleased I have put in a bid, and I put a very lucrative bid, and whatever will come, it will come to the public domain as soon as the bids will open.
Okay, from steel and banking, let's shift focus to the world of auto ancillaries now, because Motherson Sumi will be in focus today as the company is set to acquire Radel Automotive Group for $201 million. Sonia is here with all the details. Sonia, good morning. Over to you.
Hi, Anisha. Good morning. Thanks for that. You know, this is a good acquisition. The company, as you rightly mentioned, is Radel Automotive. It's a Dutch-based company. It provides interior solutions for all auto players, OEMs, etc. across the globe. It has presence in a lot of key markets like Philippines, Morocco, Argentina, etc. And Motherson Sumi has paid $201 million for this. Now, Radel Automotive has 20 plants globally in 16 countries. And if you look at the financial profile as well, it has a minimal debt on the books. The revenues for the company have been growing, and it is a strategic fit for Motherson Sumi. So as of year ended December 2017, Radel Automotive saw revenues of around $1,048 million. That compares to $890 million in the year before and $876 million in FY15. So the revenues have been growing steadily. It's also a profit-making company. It had an EBITDA of around $68 million in the year gone by. We did speak to the management and, they indicated to us that this acquisition will be EPS accretive for them from day one because it's a profit-making company and they're barely taking on any debt of Raidel Automotive. Also, the cash on books that Raidel has is about $65 million. So this comes along with the deal. They also said that, as I mentioned, the gross debt is hardly anything at about $25 million. So the EV to EBITDA stands at almost 2.5 times, which is quite attractive. It also helps increase their presence in countries like Philippines, Morocco, Argentina, etc. Now, a lot of brokerages have given a thumbs up to this deal, so I expect the stock to be in the green today. CLSA says the acquisition will be EPS and value accretive to the tune of 4 to 6%. They've acquired this interior parts supplier at a very attractive deal price. The deal at an enterprise value of $138 million implies an attractive EV to EBITDA of 2 times, and this will strengthen Motherson's position in the automotive interior space. Back to you.
All right, Sonia, thanks a lot for that. Motherson Sumi was up 4% yesterday, but still off about 20% from its 52-week high. So we'll keep an eye out on that stock, but slip into a short break, come back, we'll talk about...
Well, the government's direct tax collections for FY18 has touched nearly 10 lakh crore rupees mark. The CBDT chairman announced that provisional figure is at 9.95 lakh rupees and they expect this to go up by another 5,000 crore rupees or so. However, this is still a tad bit short of the 10.05 lakh crore rupee revised estimate. The centre is hoping that a dividend from RBI will help bridge this shortfall. Here is the CBDT chairman expressing confidence that the provisional figure will go up.
Provisional collection is 9.95 lakh crore as against the BE of 9.8 lakh crore. That is, it is 17.1% higher than the net collections of last year. And it is 101.5% of the BE. So we have already crossed the BE and we are in the process of getting the RE. And because these are the provisional figures as on today and more collections likely to come.
All right, then that was direct taxes, but let's move on to indirect taxes now. After an aborted start in February, the e-way bill, that one's finally here. Around 5.5 lakh e-way bills have been generated, and that's till 4 p.m. last evening. This includes over 2.5 lakh e-way bills generated on the 1st of April, 2.9 lakh e-way bills generated yesterday.
Okay, from now on, transporters and businesses will need to generate an e-way bill for moving goods worth more than 50,000 rupees from one state to another. Intrastate e-way bills will start in a staggered fashion from April 15th. Now remember, the rollout of e-way bill mechanism comes at a time when GST mop-up is witnessing an uptick. Now, according to Finance Secretary Hasmukh Adya, GST collection for February has now inched closer to that 90,000 crore mark.
इस महीने मार्च में हमने जो इंटरिम फिगर दिया था आपको 86 या ऐसा कुछ था, अभी तक ऑलरेडी 89,264 हो गया है. So we are close to 90 now, end of March, and this is in spite of the fact कि February was a month of 28 days. फिर भी मार्च का कलेक्शन इसलिए अच्छा है कि कंप्लायंस भी बड़ा है. कुछ हमारे स्टेट और सेंट्रल गवर्नमेंट का ऑफिसर्स लोगों को उनके पीछे भी पड़े हुए, और दूसरा कि मार्च में लोग अपना क्लियर करना चाहते हैं पुरानी लायबिलिटी भी. ई-वे बिल का अभी तक 2 दिन हो गया है. सिस्टम हैज़ बीन रोल्ड आउट. इट्स बीन वेरी सक्सेसफुल रोल आउट. सो फार देयर इज नो ग्लिच एट ऑल फाउंड, एंड सो आई मस्ट कॉम्प्लीमेंट आवर टीम ऑफ टेक्निकल ऑफिसर्स हु हैव, although they took 2 months to make it perfect, but now at least the e-way bill is on its way.
All right, we'll keep an eye out on the developments on the e-way bill, but let's move on to an exclusive now, and this one's about the central government's move to monetize the assets of economic offenders which have been seized by the Enforcement Directorate. Sources say the government, the central government that is, has identified hundreds of such properties. Timsi Jaipuria filed a report giving us the details. Here's that report.
Well, that's right. Government has got into a major revenue generation spree. This time, government has decided that all the investigative agencies which seize properties, real estate, etc., under various investigations, to start looking at to monetize these. To begin with, the exercise will start with ED monetizing their land, and this time the land will be handed over to NBCC. Similarly, when it comes to other agencies, that is CBI or the police, the land will be handed over to NBCC to take a call whether to commercialize it or to put them on rent. On the other hand, to facilitate this entire exercise, government is looking at amending PMLA. Similarly, CRPC Act to empower the CBI and the police department. On the other hand, also not to forget, a major investigative agency of the government, of the Revenue Department, that is the Income Tax Department. The IT department has refused to join this exercise. But to begin with, from the ED, the government has identified about 1,000 odd properties spread over 25,000 acres of land, and total assets that ED currently possesses is about 16,000 odd crore rupees worth of assets, including real estate, cars, precious paintings, jewelry, etc. Soon government will decide and take a call on how to monetize cars, also how to generate revenue from these painting, etc. And that call will be decided in the next meeting when Revenue Secretary takes a meeting of all these investigative agencies and start looking at revenue generation model. Remember, this entire revenue which will be generated will go partially to NBCC and to the Central Fund of India to generate and see how revenue collections can be boosted. Back to you.
Welcome back. You're watching Power Breakfast on CNBC TV18. Let's head across to Manisha Gupta, who's standing by to get us an update from what is happening in the world of commodities. Manisha, good morning. The crude yesterday fell around 3% in trade. What are the reasons?
Oh, well, yes, finally, after a very strong run-up that we saw for the month of March and yesterday as well, the evening session could not sustain, and overnight we saw 3% of a cut. Well, the numbers show that there is a rise in production in the month of March from Russia at 10.97 million barrels. Now, remember, it's Russia which has been talking about an agreement to cut output for a longer period, even 10 to 20 years. But with the kind of rise that they have seen in production for the month of March, Dutch actually does not work with that, and that's pulled the prices down. Saudi Arabia also is looking to cut crude oil prices to Asia. That's pulled the prices down. And the deepening trade spat that you have seen between China and U.S. also seems to be weighing on many of these commodities. Well, remember, just as I just said, 7.5% of gains is what we saw in the crude oil prices in the previous quarter. But this quarter definitely has started on a weaker note here. What also has seen a bit of a hit really has been the industrial metals today. Yesterday was a strong day, but Asia today has opened quite on the flat note. Even as China, a couple of cities are looking to cut output for steel from April all the way up to November. The markets really would want to see on what really happens between China and U.S. because U.S. is expected to release a list of other products to be targeted with tariffs by this Friday itself. So this week as well is going to be quite uncertain, slightly choppy. The volumes, of course, are back today, but the markets do not know what new products, what new countries the U.S. could hit by the by the day of Friday, and that really seems to be weighing on.
Absolutely. Thanks a lot for that, Manisha. Crude is the most important line from there, and of course the uncertainty on the US trade tariffs. But let's take a look at the futures and options space now. Talking about declines, the SGX Nifty for starters indicates a start below that 10,200 mark. Yesterday we did rise, but the institutions, they were net sellers in the cash markets. The FII sold about 690 crores. The domestic institutional investors, they bought about 400 crores, but net they were just about 277 crores too short. So what caused the up move? Well, perhaps it could be some short covering because the FIIs, they bought about 60 crores in index futures. They covered about 1,700 shorts, not too much, added about 177 longs in index futures. So a bit of short covering led the markets higher. The FII long exposure, remember, in index futures still stands at 18%. Further up move may provide more fuel for short covering. What took place in the index options was more exciting. The FIs added about close to 24,000 long contracts in index calls, positioning themselves for a bit of an upside, and this compared to about 13,650 long puts that they added. The put call ratio at the start of the series itself has risen to 1.42. That is one mark I'll be keeping an eye out on. And there was a lot of writing on puts yesterday as the markets moved higher. So the 10,000 put, which has the maximum open interest, saw some bit of writing. 10,100 put, as well as some aggression shown at the 10,200 put to writers of the calls. They were a little on the back foot. So the 10,700 call writers, they shed some positions close to around 3 lakh shares. So we'll keep an eye out on what takes place there. In individual stocks, long position seen on IT stocks, Hexaware, Just Dial. Long position seen on the auto space. Some shorts covered in pharma and a lot of shorts in the financials, Canfin Homes and ICICI Bank.
Okay, Mangalam, thank you so much for that. But with that, it is a wrap on Power Breakfast. We leave you with the picks of our bullseye contestants for day 2 of the week. Don't go anywhere. Bazaar Morning Call comes up next.
My first pick is All Cargo Logistics. I buy it with a day target of 160 and a stop loss of 144. Second, DCB Bank. I buy it with a day target of 170 and a stop loss of 158. Third, KPIT Technologies. I buy it with a day target of 235 and a stop loss of 215. Fourth, India Cements. I buy it with a day target of 160 and a stop loss of 145.
The first buy recommendation is on Reliance Power. One can buy R Power for a target of 38.90 with a stop loss of 36.80. The second buy recommendation is on Siemens. One can buy Siemens for a target of 1160 with a stop loss of 1080. The third buy recommendation is on Adani Power. One can buy Adani Power for a target of 26.70 with a stop loss of 23.75. And a final buy recommendation is on Amara Raja Batteries. One can buy Amara Raja Batteries for a target of 843 with a stop loss of 794.
My first call is a buy call on Shiva Cement. Buy Shiva Cement. Stop loss 24.25, target 29. My second call is a buy call on 8K Miles Software Services. Buy 8K Miles Software Services. Stop loss 659, target 734. My third call is a buy call on Big Block Construction. Buy Big Block Construction. Stop loss 159.80, target 190. My last call is a buy call on Manappuram Finance. Buy Manappuram Finance. Stop loss 107.80, target 120.